In this video, we're going to continue and we will do the balance sheet. We've done the income statement and the statement of retained earnings, and now we do the balance sheet. Again, these items are all listed here for you. So what you're going to do is you're going to go to the trial balance and you're going to pull each one of these items. So you're going to go to the trial balance and pull cash. There's the trial balance. You're going to pull cash and bring that number over. You're going to the trial balance and pull accounts receivable and bring that number over. You're going to go to the trial balance and pull inventory, but when you get to the trial balance, you'll see inventory is blank, right? So if inventory is blank, you just leave it at 0. That's fine. Anything that's blank, you leave it blank. And so you do the same thing for prepaid insurance, do the same thing for prepaid rent. You add all of these together and you get your current assets. Okay, then you go to land. You go to the trial balance and pull land. Everything here comes from the trial balance except these subtotals. So you go to land, you go to the trial balance, and you pull land, and you bring that number over. Okay, now you get to equipment, furniture and fixtures, buildings. So all of these numbers come from the trial balance. So you go to equipment, go to trial balance, get equipment, go to furniture and fixtures, get equipment, go to building, get equipment. So here's my trial balance, here's building, here's furniture and fixtures, and here's equipment. So I bring those numbers over and put them in. But then you have less accumulated depreciation, and so this is where you have to be careful. So I go to accumulated depreciation equipment, accumulated depreciation furniture, accumulated depreciation building. So when I go to my trial balance, I have accumulated depreciation building, equipment, and furniture. Notice these are positive numbers. But when I bring them over on a balance sheet, they're negative. So I have to put a minus sign in front of these, okay? So my all accumulated depreciation should have parentheses in front of it. So now for equipment, I just take the difference. 100,000 minus 900 is 99,100. Furniture and fixtures, I take furniture and fixtures less the accumulated depreciation for furniture and fixtures. 20,000 minus 200 is 19,800, and 250,000 minus 2,000 is 248,000. All right. So all of these items that we have, right, I reduce it for the accumulated depreciation. And so now I add all of these numbers up. The 50,000, the 99,100, the 19,800, 248,000. I add them together and I get 416,900. That's my plan assets. So now I take my current assets of 455 plus my plan assets of 416,900. I add those two together and I get 871,900, and that is my total assets. Again, all of these numbers, you just get them straight from the trial balance. Anything that's 0 is a 0. All these numbers you get from the trial balance, and make sure anything that's accumulated depreciation, you put a minus sign or parentheses in front of it. You take the net of the equipment and the accumulated amount, the furniture and accumulated amount, the building and accumulated amount. These are all the net numbers because they have accumulated depreciation taken out. You add all of them together and you get your total plan assets. Okay, we go to liabilities. And again, you go to the trial balance for each one of these. Accounts payable, interest payable, utilities payable, salaries payable, unearned revenue. So when you go to the trial balance, you'll find there's no interest payable, there's no utilities payable, there's no salaries payable. So when you go there, right, you go to the trial balance, you'll see some of these payable. Interest payable is not there. Salaries payable is 0, right? So you don't bring those. We have accounts payable has 2,500, so we bring that over. And then we have unearned revenue. Okay, unearned revenue is a liability, is 90,000, so we bring that over. All right. So my total current liabilities is 2,500 plus 90,000 is 92,500. I go to my long-term liabilities, notes payable and bonds payable. Bonds payable is 0, so I go to the trial balance and I get notes payable. So when I go to the trial balance, notes payable is 250,000. Okay. So now I have 250 plus 0 is 250,000 for total long-term liabilities. I take my current liabilities and my long-term liabilities, add them together to get my total liabilities of 342,500. All right. So now I go to the equity section. Common stock, I get that from the trial balance. So I go to the trial balance and I look for common stock, and here it is, 500,000 on the credit side. So make sure it's on the credit side. And then now retained earnings. So I don't get retained earnings on the trial balance. Do not go to the trial balance and use beginning retained earnings. Retained earnings comes from the retained earnings statement. So I go to the ending retained earnings and get the retained earnings statement here. So now I have 500,000 plus 29,400 gives me 529,400. Okay. And now I add my liabilities of 342,500, my equity of 529,400. I add those two together and I get 87,900. What's the check? Well, I take my total assets and compare it to liabilities and stockholders' equity. These two numbers match. So most likely, if I didn't do a math error, this is correct. And that is how we do the balance sheet. We're not going to use these December prior numbers here just yet. We'll do that when we get to the cash flow statement. Okay?